What's up, team? Sean from InvestToLive here, and had a pretty good week with the options again. So I thought it's probably time to share. So let's jump on in. And as always, I am not a financial advisor. I'm not your financial advisor. Make sure you get good advice when you make moves. Now, a little bit different on this video today. I'm going to do what I always do. I'm going to go over all of the results and give you an idea of where we are. But also, I've had several people reach out, both in the comments section of the YouTube videos as well as in my Facebook channel, which is just about 25,000 folks there. So we really appreciate the support. And I want to talk a little bit about what the difference is between selling options like I'm doing and buying options. They're very, very, very different for very different strategies. It's not going to be extensive, but I just want to at least talk to it a tiny bit because I think it's important to understand the difference. So as always, I'm not going to waste any time. I appreciate you being here, and I want to show you what we got going on. So let me just share my screen right away. Let's jump on into it. So this was the week starting April 4th, and it is week 14. So I made 3 trades, but what I'm starting to do is amp up the size of the trades a bit so that we can continue to hit these progressively larger weekly goals that I've set for myself for the challenge. I want to call something else out too in a second when we get there. So I essentially did 2 things. I jumped back into the TQQQ position. I've been liking this one. I like the premium. I like the movement. I like that I can get in and out of it pretty easily. And then it's easy for me to go and sell calls again when I am getting assigned here. So what I did right on that Monday is I picked up $465 of premium. I sold 3 lots of TQQQ. My strike price was 60.50 cents, and at the time it was a little bit over at 60.84. This is one where I actually was just looking to get back into it because I thought there could be some upside. And I also like the dual positionality of when it goes down, I still have a good call that I can sell there. As seems to be the case all the time lately, I did get assigned. That's okay. And then what I did was I had done a video with another channel, Chris Patel, and we jumped into Uber, and then I did another breakdown of their earnings from their presentation back in February. And I started feeling really bullish. And you got to remember that when you sell puts, it's because you feel bullish and you're looking to get some near-term lack of volatility to some degree, right? Where I think long-term is going to go up. I'm okay taking the premium. I'm okay picking up the shares if I have to. And that's exactly what happened here. So over the course of 2 days, I actually made 2 trades here. So pretty significant size trades. So on the 4th, I grabbed $340 of premium on 5 lots at 36.50. And the trading point was 36.58. And again, I was seeing a lot of things I liked here. There was a lot of expansion in the underlying market. There were rumors of being a super app where you can have curated experiences. You can look at travel. You can do a lot more than just rides and groceries and the freight piece. So I want to call that out. The next day, I actually felt pretty good about it. And the price was actually going down. So because I do have a long-term bias here and I'm okay jumping in at these prices, I made the same trade again, 5 lots, but this time I made $405 on the premium. This time I dropped it down to 36 on the strike price, and it was actually right at about 36 when I made the trade. So I was just looking for sort of a neutral delta here where I grabbed my 405. In both cases, I was assigned. The stock is down a couple of bucks. I'm not too stressed out about it because ultimately with the discount from the premium, I'm going to be pretty good here to sell calls or just hold into profit. So no real concerns here. This has been the strategy really throughout as I look back at all these trades. Is I've been able to really get in at these things, and when they have been assigned, I've been able to get out without really any major issue or taking even more profit, frankly, oftentimes on it. So let's look at where we sit on the challenge. I'm going to zoom way in so everyone can see here. So this is the second week of our second quarter here, right? And I grabbed $1,210. So another nice big chunky hit here on a $700 forecast that I was expecting. One thing I'm going to call out for sure, which has been really great, is the buffer that I'm getting right now on some of these key pieces here is going to be huge because as we get into some of these larger numbers as the year goes on, the extra wins here, or the extra upside is going to really help to level out on the weeks where I don't find a good trade or I don't get the premium I need on the bigger numbers. So already we're at 2,854 against our 11,100 goal for the second quarter of this challenge. So we're making really, really good progress here. And what I really want to call it that's actually super exciting is, let's just say we lowball this down to about 1,000 a week. And even let's just say we have a couple weeks we don't trade. So assuming we have 48 instead of 42 weeks, giving myself a full 4 weeks a year of finding nothing that I like, I could very easily just be making about 1,000 a week consistently all year long with this strategy with quite a bit of buffer built in as well. So that's about 48 grand a year. 48 grand a year is a full-time income. That is a huge side hustle income. That is paying off your house early, your student loans early. That could be me wanting to pay for, a couple of cars and not have to worry about it. This could be a huge chunk off the mortgage payment, right? There's different ways to think about this. And what I don't want you to do is to ever focus on the numbers that I'm going after here. If you're trying to learn about options, you think this is a strategy you like, number one, I'm not saying this because I want you to watch my videos, but watch just the way things move. Watch how they transition. I cover these things. Other channels cover them really well. There's a lot of information out there about it. But it just goes to show that consistently, I'm able to generate pretty consistent and regular numbers here. And they're getting better every week, right? So you can see here, we had some weeks where we just didn't have a lot going on, excuse me, but we are starting to amp up and see more. So at the end of this quarterly challenge, this current quarter, I was hoping to end up around 1,200. I've already passed that both weeks here. Now this next week, I think because we were assigned a couple positions here, I'm probably gonna be targeting to hit right around that 750 mark. I think that's a safe spot. And I'm actually gonna be on vacation this week here, week 16. So I am going to be hitting that 800. I feel pretty confident already 2 weeks ahead, well on vacation, because I'm going to do my research ahead of time and get a feel for what's going to be happening that week. So just to continue with this idea that this does not have to be a full-time job, but you have to take the research really serious, understand the positions you're taking and the risk of having discretionary positions as well. And I say this all the time. I try to underpin this with near-term exponential moving averages and different kinds of averages like that, just to give me sort of a degree of bias and directionality on top of the discretionary research I'm doing on my own. So that's it. Those are the results. And I want to take just a minute or two here to talk through the broader topic of options. I also don't know why my light seems to be making it a little bit dark in my office, but hey, whatever works. So what I'm doing here in this challenge is I'm selling options. When you sell an option, what you're doing is you're creating an option for someone else to buy in the market, and you're being paid a premium for it. So think of this as I'm an insurance company, and I'm going out and selling you an insurance policy. You're paying me a premium for that policy. And if something should happen, like the stock suddenly goes way down, that's on me. I now have to deal with that stock coming into my portfolio. I have to deal with any risk that comes into it in a put. And on a call, it's quite the opposite. If I sell a call, it's because I'm hoping that the price won't go up and over whatever that strike price is. And you're hoping the opposite. You're hoping it goes far beyond. So in this case, both ways, I'm essentially selling the product to the market. I'm getting premium in return. On the other hand, the much more common way of playing options is by buying options. When you buy a call, what you're saying is you believe you are very bullish that you think the stock is going to go up and go up quite a bit more than the premium you're paying for it when you include the premium in the underlying price of your strike. So it's a very bullish play. When you buy a put, what you're doing is you're assuming that the price is going to drop by, drop by quite a bit, and you're going to play it by using a put or buying a put. So the reason that this is really interesting is there's lots of different ways to think about why you would use these in different scenarios. In the scenario that I'm doing for this challenge, it's basically to prove out that you can make very serious income with a put selling motion or a call selling motion. It doesn't always mean that it's going to be guaranteed returns long term. There are risks for sure of being assigned and not having enough capital to cover yourself, or being stuck in positions you can't get out of. So something I've taken into account doing this challenge. Now, on the flip side, you might want outsized returns. So those outsized returns might be able to say, you can buy 100 shares worth of stock for the price of one call. So you're getting a lot of leverage for a much smaller dollar amount than if you went and bought those shares. And oftentimes you can then even buy more calls if you wanted to do it, or buy more puts if you want to do that as well. But the third option, but that'd be even more confusing. The third way to think about this is that options in a lot of ways can be used for hedging. Hedging is when you need to take a position, perhaps to protect yourself on a position you already have. So let's just say in the case of a Tesla, a Palantir, or an Uber like I have here, all stocks that I'm bullish on, all stocks I've talked about in other videos. If I have huge positions where I actually own the equities in any of those stocks, and I suddenly am concerned that, you know what, there's some news coming out or there's an earnings release, what happens if the stock suddenly plummets or crashes way down? Well, I may not want to sell my shares. So perhaps one thing I can do is create a hedge for myself. And a hedge, in an example like that, is I can go and buy a put so that if the price does go way down, I'll actually be able to profit from that downward drop. Perhaps when I take my profits out of that put option, I can buy more shares. I can just keep it there for safety. I can do whatever I want with it, frankly. And the same thing goes the opposite direction, right? So there's just different ways to think about it. There's different strategies for different reasons. But that's it. That's the simplest explanation I can give. And I could speak for hours and hours on the technicalities, the way to look at what's called the Greeks, the way to look at the way options move and they trade and all the different pieces of it. And there's a lot of good videos out there. I don't think they need to be remade. I think there's tons of good material on this topic already. And I don't know that I have anything new to add to it. So that's why I try not to. What I want to just simply leave you with is this. Do not take people's words for anything. I absolutely have the reason I'm tracking it here is because it's easier to show what I'm doing. All of it is within a transactional. I have all the transactions in my actual brokerage. Probably at the end, I'm guessing I'm just going to throw those together to make it really easy for review, to look at the dates and down to the pennies, because sometimes the pennies can be different or whatever. But just make sure, you trust but verify, right? If you like what you're hearing, you like what you're learning, I encourage you to keep watching it. But I would really say more than anything is make sure you know the risks to your own portfolio and what your comfort level is. And to be frank, I say this quite often, you really shouldn't even be fooling around with margins anyways, unless you have a sizable enough portfolio where there's a need for it, you need extra yield. Sometimes during certain markets, what I need is yield or income to cover other things I'm working on. So that's an important thing for me. So know yourself, know what you're trying to get out of it. And also know that in a lot of ways, you're better off just holding long-term, not paying any taxes, not worrying about the short-term movements of pricing, but, to each their own. So with that, I hope you have a great rest of the week. Next week, I'm excited to see what we can do with these pieces that were assigned to my portfolio. And other than that, thanks so much for watching. Really, really, really appreciate you watching and being here and, keep on learning. It's the best thing you can do for yourself. Thanks, everybody.